Technical analysis is a method used to predict future price movements in a market. It looks at historical price and volume data to identify patterns and trends. Traders use technical analysis to make informed decisions about buying or selling assets. It is based on the idea that market prices reflect all available information. Technical analysis focuses on price action and market psychology to forecast future price movements. Technical analysis is widely used by traders and investors of all levels of experience. It can be applied to any financial market including stocks, bonds, currencies, and commodities. Technical analysts believe that history tends to repeat itself. By studying past market behavior, traders can identify patterns and trends that may indicate future price movements. Charts are visual representations of price data over time. The most common types of charts used in technical analysis are line charts, bar charts, and candlestick charts. They provide a clear and concise way to visualize price movements. Each type of chart displays price information in a slightly different way. Trends are the overall direction of price movement. An uptrend is characterized by a series of higher highs and higher lows. A downtrend is characterized by a series of lower highs and lower lows. Trends can last for a short period of time or for several years. Identifying trends is essential for successful trading. Technical indicators are mathematical calculations based on price and volume data. They can help traders identify trends, momentum, and potential reversals. Some of the most popular technical indicators include moving averages, the relative strength index, and MACD. Moving averages smooth out price data by creating a constantly updated average price. The relative strength index measures the strength and weakness of price movements. MACD is a trend-following momentum indicator. Indicators should be used in conjunction with other forms of analysis. Mastering technical analysis requires practice and continuous learning. Traders need to develop their skills in chart reading, trend identification, and indicator interpretation. There are many resources available to help traders learn technical analysis. Traders should start by learning the basics and then gradually progress to more advanced concepts. It is important to practice with real-time or historical data. Backtesting trading strategies can help traders assess their effectiveness. Technical analysis is a powerful tool that can help traders improve their trading results.